I will. I'll do it appropriately this time. Amy, I didn't know how to count people in. That was a thing that apparently I just
What is
was
that
not.
song? You know that
I know
song?
that I have it stuck in, I almost have it stuck in my head
Are you
right
gonna
now.
count me in? Isn't it Natasha Betting or it's Bubbly by Colby Calais?
Yes,
Yes.
there you
Yeah.
go. Nice.
Hi everyone, welcome to National Entrepreneurship Week. Go listen to Bubbly by Colby Calais. All right, let me get us live on Facebook and then we can get good. All right. Joe, we're good to go in three,
All right,
two,
Colby Calais, can you count me in?
three, two.
Welcome, everybody. Hi, my name is Joe Cap, and I am co-chair of National Entrepreneurship Week. National Entrepreneurship Week is a congressionally chartered annual event to support and uplift America's new businesses and startups. Originally founded in 2006, National Entrepreneurship Week takes place every year during the third week of February. In 2016, Amber and I relaunched National Entrepreneurship Week, and now all across the United States, from Maui to Miami to Maine and everywhere in between, America's entrepreneurial ecosystem is vibrant and thriving. So I want to go ahead and welcome our speaker today from the Securities and Exchange Commission, Amy Rauschauer. Hi, Amy. How are you?
Hi, good to see you.
Yeah, welcome. Well, before we get into a conversation with you, I want to throw it over to my co-chair, Amber, with a little bit of housekeeping stuff. Amber, good morning.
Yes. Hi, everyone. Excited for another engaging day of federal agency office hours. Just a couple of quick reminders. The chat is available for you to introduce yourself, share a little bit about where you're from. But if you do have any questions for our speakers, we please ask you to use the Q&A function. This allows us to make sure we're keeping track of those and getting to those at the end of the session. So please, again, use the Q&A function for questions and the chat for general introductions. And with that, I'll throw it over to you, Amy, to go ahead and get your screen and your slides ready, and we'll do our quick introduction from the Security and Exchange Commission.
Excellent. Great to be here. And as Amber said, I'm going to play here and make sure I still know how to share my screen. And I'll let Amber keep me honest to make sure you're seeing my fancy cover slide there with a long
Me
disclaimer.
too.
Looks
Awesome.
fantastic.
Awesome. Well, thank you all for joining me this morning, kicking off your day with me, presumably, unless you're an early bird. I am Amy Reischauer with the SEC's Office of the Advocate for Small Business Capital Formation. And before I dig into all those words and go any further, I need to give my lovely SEC disclaimer that the views that I express today are my own and don't necessarily reflect those of the Commission, any of the commissioners, or any of my colleagues on the staff. Here you see a bit of a roadmap about what I'll try to cover today. To level set, I'm hoping that by the end of this hour, you will walk away or log off knowing a little more about the fact, well, first that our office exists, that's sometimes a best kept secret, but also kind of what we do and how we might be helpful down the road. I will provide a very high level overview of the kind of the regulatory framework to show how and when federal securities laws and our agency applies or is relevant when businesses are seeking to raise capital from investors. So think of today as kind of a map to get the lay of the land. Again, not legal advice, not a substitute for getting great advice from lawyers and advisors. But instead, we just hope it equips you with some tools to be better informed if you decide to embark on taking on investors for your business. So with that, let's go ahead and get started. So who is this small business advocacy team? We are an independent office within the SEC. Sorry, my screen froze there for just a sec. It needs to wake up too. So we're an independent office within the SEC. So the SEC, the agency as a whole, has a three-part mission, and that is to protect investors, to maintain fair, orderly, efficient markets, and to facilitate capital formation. So you often hear, in the news, you're probably going to hear about the SEC kind of going after the Wall Street crooks or investigating financial fraud. And that definitely reflects a large part of what the agency does. But in addition, we also really want to help. We want to, make sure we're doing more than just enforcing the laws. We want folks to understand what those laws are and know how to comply, because that's so essential to fulfilling that three-part mission that we have. So our office specifically again, formerly the Office of the Advocate for Small Business Capital Formation. Thank you, Congress, for all those words. We were stood up in 2019, and our mission is to find practical solutions for small businesses and their investors so that they essentially can get back to work building those great companies, making those great products and services that, as we all know, so critical to our economy. When I say small, that scope is pretty wide. So that includes everything from very small startups all the way to smaller public companies. And that's up to 250 million in market cap. So shockingly, not all of our constituents actually think of themselves as small businesses, but we seek to serve them nonetheless. So we also have a particular focus in the office, mandated by Congress as well as by some personal passions of the team, on identifying and addressing the unique challenges that are faced by diverse, women-owned, and rural businesses and those investors. So not everybody's journey is the same, and we really try to understand what's happening in kind of every nook and cranny of the ecosystem, if you will. So that's our mission, but what do we actually do? My kids sort of ask me that a lot. So what does you do on a day-to-day basis? So we've sort of come up with a little diagram to try and help understand our interrelated activities. So we analyze capital raising trends and the impact of the federal rules on small business capital formation. We also help small businesses and their investors both navigate the securities law framework through educational resources, and we seek to improve that framework through our policy recommendations. And then we also, kind of to do all of that, we engage with entrepreneurs, investors, thought leaders across the country, often by partnering with national, regional, and local organizations, working with Joe and Amber, for example. And we do that to not just share about who we are, but to also gather feedback and hear about the stories and the challenges and the successes that folks are having in capital raising, because that's the information that informs everything that we do. So now that you know a little bit about who we are, why we're here, let me tell you about some of the trends and some of the stories that we're following from companies that are seeking to raise capital. Gonna be a lot of data here. I will say that all the data you see here today is available in our annual report, and I will show you how to find that later, or I think my colleague Jenny might be on and might be able to throw that in the chat. So, so turning to some of that data. When you assess the sort of the lay of the land or what's available as far as funding small businesses, it's important to note that really less than half of small businesses actually seek external funding. Most of them are relying on personal funds or cash flows like from the business. So internal sources. When you look at companies who are seeking external capital, only about 8% of those turn to investors. So that's a tiny slice of the pie, right? That's like our little corner of the playing field, if you will, is pretty small, but we want people to know that when they're in it, first of all, and then what the rules are that they need to know about to kind of play safely, to overstretch a metaphor. But so that's kind of our goal. A lot of what our office does in trying to fulfill that part of the mission is to look at the data showing like, who are those 8%? What makes capital from investors right for those founders? What makes those businesses right or ready for the investors? And then, of course, that depends a lot on who those investors are and what kind of capital they have ready to deploy. So those are lots of big questions. But let's start with some of the data on who those founders are. So looking back at the internal sources of capital, like personal funds, we see some considerable differences across demographic groups. And those differences really do have an impact on the starting line for those founders, for those entrepreneurs. And as you can see here, Black and Hispanic entrepreneurs may face some pretty significant barriers when you look at that wealth gap, and you look at how that might affect their ability to tap into those personal assets to fund their businesses. then turning to external sources, first looking at something like debt. So not going to investors yet, but just looking at what kind of bank and credit things like that are out there, you'll see some similar trends. Diverse entrepreneurs are less likely to receive all of the financing that they're seeking, and that's even accounting for things like credit risk. So that might be a reason that why founders are turning to capital from investors. But raising that kind of capital is particularly challenging for women and diverse entrepreneurs. So women receive only a small fraction of total VC funding, just as an example of capital from investors. Not all capital from investors is VC funding. We'll talk about that a little bit. But as an example, you see that women receive tiny slice of VC funding, and then only, again, a tiny slice of that goes to women of color. Not on the slide here, but similar trends looking at entrepreneurs of color across the board. About 1.5% of VC funding goes to Hispanic founders and about 1.1% to Black founders. Rural entrepreneurs, another one of our target audiences, if you will, they also face capital raising challenges. So most capital raised doesn't go to support businesses that are outside of those kind of traditional capital raising urban hubs. You can see some very tiny percentages here that is not illustrated on the slide, but probably obvious, disproportionate to how much is actually represented by folks outside of the big urban hubs, excuse me. So as you can see, we are very engaged at our office in kind of identifying and compiling data to illustrate what's happening in capital raising. For those of you who want more, again, check out the annual report. I think the link showed up. If not, we can certainly make it available, and I'll share it later on in my pitch here. But for those who may not be as enamored with the data as I am, let me move on to a snapshot of the rules. Really a high-level framework again of what the rules are that folks are needing to comply with. So there are a number of pathways that businesses can take to raise capital from investors under the federal laws. I'm not talking about state laws today, just at the federal level, obviously. So although before I begin that, I want to say there's a ton of information on the slides that I'm about to present. I'm going to try not to read it all. I've taken that class before. I want to keep you all awake. But I am happy to make either the slides available if that works for Joe and Amber, or I promise I'll send you links. I'll direct you to some resources that provide all the same information. So if you don't like to take notes, please don't take notes. So now I'll start with my securities law lecture. I'll clue you in. The framework that Congress created, and this is the Securities Act of 1933, has expanded over time, quite a bit recently in the last 10 years-ish or so. But one key concept remains, and that is that every offer or sale of a security must be registered with the SEC, like an IPO, for example, or it has to be conducted under an exemption from registration. You'll sometimes hear them called private offerings. Not every exempt offering is private, but that's a little pointy-headed lawyery of me, so I won't go down that rabbit hole. But basically, you're looking at registered offerings and exempt offerings. And to reiterate that rule, that tenet, and the SEC's reach, that extends to any offer and sale. It doesn't matter how big you are or how small you are. It doesn't matter if you're public or you're private. It doesn't matter if you're selling to like some giant VC fund or to your best friend Joe down the street, right? You got to either register it or you got to find an exemption. And this slide kind of breaks that down with some examples, but again, I'll try and find an easier way to break that down for all of you. On this slide, I guess I broke my promise to move on from the data, but I couldn't resist. This shows kind of a quick snapshot of what is being raised under the various pathways. So the bubble graph here is showing aggregate amounts raised over the 12 months ended June 30 of 2023. The blue bubbles are the exempt offerings. That largest one is Rule 506B. And then other there below it is generally statutory private placements and some securities outside the US. Those other smaller bubbles are some of the other exemptions I'll flag for you. The other side of the chart, the gray bubbles, that's going to include the IPO, which is actually the smallest of the gray dots. Other registered offerings, that's on the bottom. And then the largest one there is flows into registered funds, so diversified investments. So what's behind all those bubbles? I'll move back to some of the legal analysis here. You hear folks talk about friends and family, angel rounds, a Series A. There's lots of labels for raising capital. But the securities laws don't actually differentiate offerings that way. Instead, going back to my fundamental tenet, if the company raising capital wants to avoid registering the offering, they have to structure it to fit within the rules of an exemption. And these slides and some of the resources will kind of summarize what those exemptions are. The first three on this slide they all fall under Regulation D. So you'll hear that term from time to time if you're not already familiar with it. First one, there's 506B. This is the classic private placement, far and away the most commonly used pathway. Companies can raise an unlimited amount. It has to be primarily from what are called accredited investors, and they can't generally solicit or advertise the offering. Basically, this is where the company has a pre-existing substantive relationship with all of its potential investors. A lot of what you hear called friends and family or angel or funding rounds, they're often seeking to comply with this exemption. You saw that in the data. 506C, the next one you see there, this is, I say a recent twist, it's been a few years now, but this is a Jobs Act addition. And this is where the company, again, can raise an unlimited amount, and it can generally solicit, but all investors have to be accredited, and they have to take reasonable steps to verify. And then 504 at the bottom, this is a kind of a limited offering. It's up to 10 million in a 12-month period. And again, they often have a relationship. The companies often have a relationship with those investors. Moving on from Reg D, regulation crowdfunding. This allows companies to raise up to 5 million in a 12-month period, and they use a registered funding portal. We're also getting to the point here, now there are some disclosure and filing requirements under crowdfunding, and that's both at the time of the offering and ongoing if you continue that offering. Just a note on crowdfunding. This kind of crowdfunding is for when you're offering securities. There are lots of other types of crowdfunding, like rewards-based or donation-based. You see GoFundMe's floating around, things like that. Those are different because they're not selling securities. The other one I would flag on here, Regulation A, it's another alternative. Sometimes these are called mini IPOs because there are some disclosure and filing requirements, again, both at the offering stage and then ongoing. They're not quite as fulsome as an IPO, as a full-blown registered offering, but they are at a pretty high level. And in fact, companies can use Reg A as an on-ramp to becoming a reporting company. So as you can see, there's sort of a whole kind of, there's a plethora of offerings, and they vary from whether you're talking about disclosure or who you're offering to. And it's just really important to make sure that if you are bringing on investors, if you are issuing a security, that you know that you're fitting squarely into at least one of these pathways. How do you possibly choose the right pathway? That's a tough question. If what I just rambled on about is new to you, it was probably a lot. I think a lot of the founders that we work with on a regular basis would agree with you. It's unavoidable. The ins and outs of the securities laws are complex. And you layer on top of that the fact that the language used in practice is often disconnected from the regulatory terms. We heard that with like friends and family, or is it 506 something or another, right? So what our office has done is we've developed and compiled a number of resources, including we have a Navigate Your Options tool. My husband likes to call that a choose your own adventure. But the goal of those tools and those resources is to help entrepreneurs and to help them identify the pathway that's going to be the best fit for their company and their circumstances. And the tool that we have asks kind of a few threshold questions to break down the options available and help them choose which one might be right. The whole sort of who, what, how, where, to help them figure out the most relevant pathway. For example, one of the big differentiators in what pathway you might choose is how much you want to raise. So as we highlighted before, different exemptions have limits on how much can be raised. Some are unlimited, some are up to 5 million, right? So you have to be careful. But in addition to the caps, we also look at data from our economists to see what types of offerings are actually practically being used at various amounts. So, there are no minimum offerings. It's not like you can't rely on the exemption unless you're raising at least X. But we've seen that very few issuers rely on 506C for less than $1 million. It's just what the data shows. Similarly, well, at least historically, very few companies went through an IPO for less than $75 million. That said, most recently, the median IPO was 17 million for anybody who might have been paying attention to that bubble graph before. So this is clearly an area that our office will continue to watch as we move into 2024 to see what's happening in that IPO space. But at least historically, IPOs were larger amounts. So rather than continue with my slides and kind of show pictures of the tools, I thought it would be helpful to just share my website screen and kind of show you where to find them and maybe highlight some of those. So I think to do that, I'm going to stop sharing for a second. And then I'm going to reshare.
And Amy, while you're doing that, I'll just
please.
kind of weigh in here. One of the things that I see, and Amber and I have the wonderful opportunity to go ahead and coach and teach and work with a lot of different students. The biggest question that we get is really, where do we start? Right? And especially, you have a range of entrepreneurs, right? But let me just ask you, from a very, the most basic question in terms of coming to the table, and then I'll let you share this, but it's going to be a question.
Of course.
You get it all the time. At what amount would you say it really makes sense for me as an entrepreneur to start weighing in and really doing more due diligence around this? Because I have a lot of stuff going on. I got to find clients and customers. I got to do marketing. I got to go ahead and take out the trash, right? I got it all going on.
Yeah.
At what threshold are we talking about? Is it, 100,000, 250,000? And I know it all depends. So you don't get to give me the
you took my answer.
You don't get to give me the legal answer.
Excuse me. Well, I will twist the answer a little bit. I won't leave you with it depends. But I will say that there are a number of factors that are going to go into a company getting to the point where they think, okay, now I am ready to go talk to investors. And so it's very much going to be a factor of, were there other sources that were right for you? Were there what we call non-dilutive sources of capital, right? Where you don't have to give up a slice of your ownership. You don't have to dilute your ownership by giving it to someone else. If you're not ready to cede control of what you're doing, doesn't matter whether you need.
That's huge. That's
Yeah,
huge. A
that's
lot
huge.
of people give,
Whether you need
especially early
$1,000
on.
or $1 million.
Yeah, early on, people give away a lot, big portions of their business,
It's
and
big.
they don't necessarily recognize what they're doing
Right.
in exchange for cash and that capital. So that's a good point.
Right. Another big thing, and I have a whole list of them I'll show you, but another big one that comes to mind right away is how much do you need for the sake of your business, right? I don't know. I hear a lot about the goal of my business is to get VC funding, or the goal of my business is to go public.
Right.
But underneath it all, you have a business, and the
Yeah.
goal of your business is to keep your business going. And how much does your business need?
Yeah.
And how long is that going to last you? And are you going to need more later, or is that going to get you to, a positive revenue flow? So not only does how much do you need help you determine what pathway to take and whether you're ready to raise investors, but you need to know what it is, and you need to know what you're going to do with it.
Yeah.
And you need to have a compelling story to tell your investor that, yeah, I only need $50,000 and this is what it's going to become, or I need $1 million and this is what it's going to become.
Listen,
So,
I totally appreciate that answer, and I'm giving you a hard time for a number only because I know that the answer is it really does depend, right?
Yeah.
And just to kind of pull this thread through a little bit for it, and then we'll go back to the website. But I think the important piece is if I have a manufacturing company, right, and all of a sudden I get an order from Walmart, right, and it's a purchase order, and I need to fulfill that, but I don't have the capital, I can take that to a bank and say,
Right.
hey, look, I have this, and I will use this purchase order in order to go ahead as collateral for this, but I need to build out excess capacity. Well,
Right.
that is a very, very different circumstance than maybe a company that's looking to go public.
Right.
Because in that circumstance, yes, you may be charged an interest rate, but you're not going ahead and ceding any control. So
Right.
you are right. The purpose of the funds actually is super, super important, and how you're going to go ahead and pay those funds back, or what obligation you're taking on, whether it's new people who are going to be part owners, kind of telling you, hey, you should do this, you should run your business this way, right?
Right.
Or that you have a bank, even though you're paying interest, you still own and have 100% control over a business. So
Right.
I appreciate your answer. I knew it was going to be, well, it depends, but I agree with you on that.
I tried to flesh out the it depends.
But it's good. All right. So bring us over to the website and walk us through that, please.
Yeah, sure. Let's see. Okay, I think I'm going to get you there. I'll let you guys tell me again if it worked.
Yes.
You see my website?
Yep.
Excellent. So this is our capital raising hub, and it is where we try to make all of our resources accessible. If you don't have the beautiful link, or you're not watching me jump to it, if you go to sec.gov, you'll end up with this blue ribbon up here. If you go to education, it's right there under small business capital raising. But you'll get you here. Number of resources here. I talked a little bit about the Navigate Your Options tool. That's the choose your own adventure I talked about, where it asks the different questions. I won't go through the whole thing, but it starts with some really basic ideas. The first 2 or 3 questions aren't even getting to the securities laws yet. It's, does your business exist? Well, if your business doesn't exist yet, to Joe's point, probably not ready for us. But if you click no, we'll direct you to some other agency resources that might be helpful to you. So, and that kind of theme continues throughout the tool and really all of our resources. We really try to make them, kind of a summary of what the rule is, or what the question is, or what the issue is. And then in any instance, there's always an option to, like, okay, I get this, I want to dig deeper. You'll find in the tools, like, okay, if you want to dig deeper, here you go. If you want to go all the way to a rabbit hole, we'll get you there. But if you want to avoid the rabbit holes, we're trying to make it more accessible.
Sure.
So that's our navigator tool. I'm going to jump through super quickly just to show you what the results look like, because I think that's kind of useful.
That'd be
So I'm going
great.
to say, have I explored options? Yes, I have. Have I determined which pathway? No. If I had, I probably wouldn't need this. Again, is there a dollar threshold that tells me what pathway? Let's see, less than $1 million. Here it is, back to some of those questions I talked about before. How am I going to find my investors? Do I know them already? Do I have that relationship, or do I need to find them? Let's say I'm here because I don't have a rich Uncle Bob who's going to help invest in my business. So I'm going to say, I don't even know. In state, out of state, I'm going to say out of state. I'm in the DMV. I can't have lunch without crossing jurisdictional borders. So are my investors all accredited? Well, gosh, do I even know what an accredited investor is? Here's an example where, look, I can click through this link and I'll get to some resources to tell me what an accredited investor is. For now, I'm going to say I know what it's sort of income and asset based, depending on whether you're talking about an individual or
whether or not somebody can go ahead and take on the risk of making an investment like that without sacrificing their life and their livelihood.
Exactly. So, so I'm going to say no. And the point of my quick scroll there that may or may not have been helpful is that in the end, we're going to show you pathways that might be relevant and might not. And like I was saying before, if once we get you here and we give you some options, each one of these, if you want to learn more, okay, I've heard of this crowdfunding thing, I want to learn more about crowdfunding. If you click on that, you'll get to more and more resources about what crowdfunding is. So I'm going to cheat and go to my little tab there to go back to the capital raising hub. So that is, that's the navigator tool. That one's kind of fun. It helps, it's a way to kind of bring a whole bunch of concepts together and help you parse through them. But we have some other even more basic ones that I wanted to flag. I talked a little bit earlier about where our little corner of the playing field is, or where our little slice of the pie is. Talked about internal and external funding sources. One of our more recent resources that we created, and I'll take this opportunity to put in a little plug. This is very much in response to feedback that we've gotten from folks on events like this, whether it's Joe or the audience. It's people come to us and say, that's great, but I don't really understand this concept, or I really wish you would explain to me what the difference is between you and the SBA, or, whatever it might be. So that prompted us to be like, well, let's try and figure out a way to put what we do in context with all the different funding options for a small business. This is our roadmap. Again, common terms. You can self-fund with those personal resources we talked about. You can explore, these are those non-dilutive options that I talked about, grants and loans. If you want to learn more, we've got some links to some additional resources to find grants and loans. But if you're making it down that journey and you come around the bend and you're part of that 8% of the less than half, and you're in our world, then here's some more information. So that's another, sometimes just handy to have a visual to kind of understand
Sure.
when you're even talking about capital raising from investors.
Yeah.
And then two other suites of resources. We have a glossary. I talked about how the language of in practice of capital raising doesn't always match the language in the rules. On both sides of that, there are tons of terms that get thrown around, and we want everybody, excuse me, on the same page. We want people to be, knowing what the word means that they keep using. To make my Princess Bride reference there. But anyway, here's an A to Z of, excuse me, some common capital raising terms that one should be familiar with. Again, here's that accredited investor that Jen and I started to talk about before, and here's your option to get deeper and deeper into what it means to be an accredited investor. So that's our glossary. And then the last suite I wanted to highlight was our, we have a suite of kind of one-pagers, again, based on feedback. Lots of folks being like, I wish I just had a cheat sheet. I just need some Cliff's notes on what it is you're talking about. We thought that's a great idea. We have folks who can do that. We call them our building blocks. And these are broken down into some basics, like getting ready to raise capital, maybe a little later stage where you're actually getting into that early stage capital, and then later stage capital raising all the way out to IPOs and things like that. Each of these just tries to break down and address a particular question in kind of as clear a way we can. Joe and I were having a conversation earlier about when do you know when you're ready? How do you get there? And I said I had a handy little list I'd be happy to share with you. Here's that handy little list. We came up with a cutesy little acronym. It's CAPITAL. These are things we think you should keep in mind as you're determining if you're ready, whether it's because you need, again, $1,000 or $1 million. You're going to want to have your books ready. One of the things we hear in a lot of these events for people who do get there and who do have an offering and who do raise capital, oftentimes they're like, man, I wish I had known before that first meeting or before I started reaching out what I would need to have ready to make that pitch to investors. And so this tries to capture some of those things that we think people wish they had known sooner, if that makes sense. So C, you want to have your cap table and your books and financials ready, because again, your investors are going to want to see that. Amount needed. We had a whole conversation about that. You got to know what the amount is. And then P, you got to know what you're going to do with it. You want to have that plan. One thing I don't know that we touched on as much, you want to have an investor strategy. Sometimes the question about bringing on investors isn't so much about the check that you need from them as it is about what else are they going to bring to the table. They're going to bring a check, but Joe talked about like having that investor talking to you in the corner. For better or for worse, that investor is going to come with opinions and thoughts. Oftentimes that investor is going to come with, maybe it's customer connections, maybe it's experience in your industry, maybe it's just experience having been through early stage financing or whatever financing level your company's at the time, right? So you want to know, you're partnering with these investors for more than just a check, and you really want to know that you're making that partnership for the right reasons, that it's the right partnership for you. So it's something to think about.
Yeah, it is a bit, and that is a big issue. If anybody has ever watched Shark Tank, they know that you're not just getting in, you're not just getting the money, right? And so you want to be careful. It's a marriage actually, and you want to go ahead and make sure that whoever you're marrying has the similar goals and values and a whole host of things, right?
Absolutely. Absolutely.
Yeah,
And
sure.
they can bring so much value to the table beyond that check. And so, so keep that in mind. Another thing we talked about, like, well, how much money do you need before you go to raise capital. The process of finding investors and raising capital takes a huge amount of time and resources. It is a full-time job on top of your full-time entrepreneur job, maybe on top of your other side hustle full-time job you have. So you have to be ready, and you need to know that it's an investment even to find investors. So understanding what you have before the investors come on board, understanding what you're going to need after the investors come on board. And then again, similar themes, advisors. I said it from the very beginning. None of this is a replacement for good advice, good legal advice, good, someone to help you with your books. Find good advisors. And all of it should be with a long-term vision for yourself, for your investors, for the company, for the business. So, one of the examples of our building blocks, we've got lots more of them.
Amy, we did have a question come in if you're open to answering
Yeah,
one.
absolutely. Absolutely. And I can stop sharing because I think everybody knows how to find our resources now, and then I can.
Yes. And thank you, Jenny, for putting all those great links in the chat. That's been very valuable. Is there a list of accredited investors? How can they check if a potential investor is accredited?
So I'll take that as two questions. One, no, there's not a list. Networking and finding investors is consistently one of the top challenges to raising capital. Some people happen to have a great network of accredited investors or connections with VCs. Maybe it's because where they grew up or where they went to college or where their first job was or sheer happenstance. Lots of people don't. We can't connect folks with investors. Very few, well, outside of sort of a registered broker dealer type person, the idea, connecting people with investors is tough. I think what we hear from folks is it all has to do with building your community, finding your mentors, finding your whether it's like an entrepreneurial support organization or a local investment club. There's lots of ways to do it, but unfortunately there isn't like a database of investors.
Let me add to this as a former financial and investment advisor and as somebody who is an investor in businesses. The piece that you said about creating relationships is super important, and those relationships take time. Somebody who has, when I was on my financial services business, I remember like people would say, oh, I want to go ahead and get money. And, there's a Pitbull song. He says, you want, what is it? You want money, get it, ask for advice. You want advice, ask for money, right? That relationship piece is super important because you have to remember that the people who come to the table in these circumstances, they get hit up all the time from a lot of different sources. And it's not just to invest, it's also for charitable contributions, their kids' colleges and universities, alumni programs. So that networking piece and how you come to the table and present yourself, which is harkens back to something that you said earlier, which is do your homework and look at the resources here, because if you don't come to the table with your materials and they don't pass the sniff test, oftentimes accredited investors, they're going to have you talk to the accountant or some other gatekeeper before you go ahead and even have any conversation with them. And so I think that it's important for folks who are listening to this to understand that there's so much work that you want to do beforehand, because once you get in front of an accredited investor, you don't have the opportunity to go ahead and have 2 meetings if the first meeting's not good.
Yeah. The one thing I would add to that, we've had lots of conversations. We hear from really just great voices in the communities about how they ended up successfully networking. And excuse me, I seem to be losing my voice this morning. One thing that we hear consistently is when you're out there networking, the first X number of weeks, months, years of your networking should be giving to your community, should be offering to community. Like build those relationships in your communities by investing in them yourself, not necessarily with a check, but just being out there. So so much of it is if you've given first and you've built that relationship, then when you're ready to ask, you've built that relationship, right? So so much goes into that. I wish I had an easy answer. But you
The
know,
second piece, so I
yes.
definitely, the list does not exist. The limit does not exist. There's no list. It's
Yeah.
all relationships and those. But when you are starting a conversation or relationship with a potential investor, like how do you know that they are accredited? Is that something that they'll
So
share? I'm curious.
yeah, so first has to do with the definition of the accredited investor, and you know, I'll take the individual part of it. You know, it's based on income and net worth primarily. Income of over 200 for an individual, 300 for in conjunction with a spouse or spousal equivalent, and then net worth of $1 million, not including your primary residence. You can also be, an individual can also be an accredited investor if they have certain professional criteria. Right now, that list is limited to a few FINRA licenses. If you want to know more than that, go check out my resources. I'm going to spare my limited voice. But how do you verify that, and how many steps do you have to take to verify that? If you're in the 506B space, which is the kind of classic you know, regulatory private placement, then you need to have a reasonable belief that some of those things are true. And so oftentimes it's a matter of you know, asking questions of your investor. If you, and that's one pathway. If you are in the 506C space, that's the one, if folks recall, same thing, unlimited amount, but you can generally solicit, and you must sell only to accredited investors that you have verified, and you have to take reasonable steps to verify. What reasonable steps means, the commission, as they were adopting those rules, we're trying to balance, it's a principles-based requirement. You have to take reasonable steps to verify. What is reasonable under different circumstances is going to vary, right? If you're talking to a government employee, you probably have to take a few more steps to figure out if Amy is accredited than if you were talking to Bill Gates, right? Like some things are pretty obvious. The commission didn't prescript exactly what you had to do. It did, though, because people don't like uncertainty, and especially lawyers don't like uncertainty. In the rules, there are some examples of what you can do to verify who might be an accredited investor. So it's a little bit of a balance. So to go back to I'm not really saying it depends, but there's a certain level of research that you have to do if you're in the 506B space where you haven't advertised to the broad public and you have a relationship with that investor. If you've advertised and there's maybe less of a chance that you know your investor personally, then you have to take it a little further and you have to verify what that means. So hopefully that helps answer the question.
Let me help with one other additional piece, Amber, because I think there's another piece of this, and I think it might be an additional aspect of your question. You know, people who are in this space, they engage in certain behaviors. They're giving large amounts to charities. They're going ahead and engaging in philanthropic events, and they're going to galas. There's certain, not all of them, okay? Not all of them. If you've ever read the Millionaire Next Door kind of situation, you know, but oftentimes you can look up and do research on, are these types of people, who are the types of people that are giving, or have they already made certain types of investments? And oftentimes what you'll see is the people who are accredited will make investments in certain types of industries on a fairly consistent basis that they know really well. And so you will see, perhaps there's a press release, or there's some sort of social media that comes out about those things. So at a very basic level, you know, seeing and kind of following the people who are kind of in and following the industry that you are in. Amy, am I wrong there? I mean, no,
I think that's right. And I think that's why the commission was careful to make it a principles based, because there's lots of different ways, there's lots of different information that someone can pull together, both to find accredited investors and to get comfortable that they really are accredited.
Right. And that's like a two-step process, right? First is to find where those people sleep, eat, and breathe.
Yeah.
And then it's to go ahead and kind of like, hey, kick the tires, as they say, right? And to see
Yeah.
whether or not.
Yeah.
I want to go ahead in the interest of time, because I know that we're creeping up here on the interest of time. Amy, is there anything else this has been so informative, and I really appreciate that. I also want to give a quick shout out to all of the fellows from Ukraine who are watching and listening about this. But I did want to see if there's anything else that you want to make sure, because we got to wrap this up for our next
Yeah.
session. And I'm going to
Absolutely. One thing I'll say, and I probably said it a couple times, but so much of what we do is informed by what we hear from you, from the audiences. Whether that's, yeah, that resource was great, but you should have X. Let us know. Give us that feedback. Whether it's, I've seen your annual report, but you're missing data on this particular trend, or add this to your data. We want to hear from you, whether it's data or feedback on resources or just your story. Feel free to reach out to us. That's how we inform everything we do. So you can reach us. Again, I'll share the slides. I've shown you where the website is. I think Jenny's dropped some stuff in the chat. But you can reach us through our website at sec.gov/OASB. You can email us at smallbusiness@sec.gov. Find us and let us know what more we can do, and share your thoughts with us, because
Amy, I just want to give a shout out to you and your team, because you're probably one of the most accessible teams that I have seen in quite a long time. You guys are out at conferences and out at events and really helping people, uncover where they might find funding and funding opportunities. To all the entrepreneurs listening, listen, their job is to go ahead and keep us all safe from investing, but your job is to go ahead and do the hard work and go ahead and figure out how these pieces work. At the end of the day, every business is different. And that's why the answer is it depends. It depends on what the funding is for and where it's going to. And I totally appreciate that answer. This is the right answer, because it's very, very difficult depending on your circumstances and what your business is, what you're trying to do. With that, Amber, I want to throw it back to you. What's coming up on the deck next?
Absolutely. Thank you, Amy, again, for just that incredible resource. I know capital access continues to be one of the biggest questions that we get. So appreciate all of the resources that were shared. Coming up next, 11 a.m., we have the U.S. Patent and Trademark Office, which is another question that we regularly get, is how do I protect my business? So would encourage everyone to hop onto that one at 11 a.m. I dropped the link to our federal events in the chat. But otherwise, Amy, thank you so much for this incredible learning opportunity, and we appreciate everyone.
Thanks for having me.
All right. Thank you so much, Amber. I'm going to count you out. And 3,
Okay.
2,